literally these results are too good and I'm super fired up about it. You can hire me. I can figure out a way to spend some more money. You have to spend some more money. You can't have profit margins at 55%.
You show me a company with 20% profit margins, I show you the next company as short.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
Douglas, I don't normally do this on the show, but I just have breaking news in from a source. This is February 1st, early in the morning.
Oh my goodness.
As part of the tariff executive orders, it appears that our president has issued an executive order relating to the fact that we are no longer allowed to talk about value investing underperformance.
Whoa.
I mean, just props. I'm also hearing that David Einhorn and Seth Klarman, their 2024 underperformance may get pardoned. It just may be wiped from the record. We can no longer mention it.
So does a pardon in this case mean wiped from the record, or does it mean they get money? Like they get bigger returns?
I'm a little confused. My source here is unclear on that, but I'll follow up for you. Executive orders everywhere.
Everywhere.
Value investing is great. Here we go.
Everywhere. Good news is we can still talk about Cathie Wood underperformance, which we will touch on today.
Yeah, thanks for the listener mail there. True. How are you?
I'm doing quite well. I got a few things I want to talk about today with you. A couple of them on the more personal portfolio front, maybe one of them probably there. And then just other things happen in the world. But I have a quiz to start.
First and foremost, Douglas did some great work. The intern did some great work. We are now on YouTube. We've gotten personal feedback that we should be on YouTube. A lot of people like the YouTube music player. And if you're on the YouTube music player, you can now just throw the podcast in your feed. So please, you guys know how these things work. Like, subscribe, all that nonsense to fool the algorithm, because the world is run by computers these days. Please visit the channel YouTube and help support us there so more people can hear the show.
Yeah, don't call us a Luddite. We've been here for years. Okay, just getting onto YouTube. It is youtube.com/@SkippyDoogles. So go on and do all the things he just mentioned. Alrighty. Quiz time. Can you handle this?
I'm concerned.
I know you should be. You should be concerned. So what I'm going to do here, and this is what you are not good at, and mostly you're not good at this because no one is good at what I'm about to do for you, but I'm going to do it anyway because I think it's fun. I'm going to give you a few stats about a stock, and you have to guess what stock that is. Okay?
Ooh, okay. Right. I mean, do I get any hints? Are these
They're stats.
Bigger names?
You know this organization. Come on, I'm not going to give you an organization. You probably use this organization at least monthly. Most people don't, but you're weird like that. Okay, you ready?
Yeah.
Forward PE ratio, 10.4. Price to sales, 1.2. Price to book, 4.4. Return on equity, 43%. Operating margin, 10%. Forward annual dividend yield, 2.1%. Okay. Two more things. Market cap, $570 million. Last 5-year return, 900%.
Okay.
I'm just going to, just to reiterate a couple, I'm going to do the first thing I said and the last thing I said. Last 5 years, 900% return. PE ratio, forward PE, 10.
10.
After 10x.
This is a U.S.-based company?
America.
It's pretty big. I mean,
$500 million?
Oh, I thought you said 500 billion.
Oh,
sorry.
No, that'd be one of like 6 companies.
No, that's like a top 15 at this point.
Yeah.
That changes everything. I'm thinking there's some debt on the balance sheet. It's not like a pure industrial play at a price to book of 4.
There you go.
It's pretty cheap at 10.
Mm-hmm.
If for a second I was thinking of a company that had recently cut their dividend. So the 2.2% dividend is what's really throwing me off.
It's a consumer organization.
Can I get it? Okay. It's an industry of some sort.
Consumer, B2C, consumer, a DIY, type organization.
Oh, yeah, Etsy doesn't pay a dividend, and Etsy's bigger than that.
Ooh,
What is it?
Build-A-Bear.
I've seen this chart. I saw that 900%. I do not use Build-A-Bear once a month. Doogles. Breaking news.
I see all the bears in your house. Talk about you don't use Build-A-Bear. Come on. I what I loved is I think this is probably what you're talking about. I saw this tweet. It's simply just a genius, the caption with this type of a chart. It says people are losing their life savings, getting rugged on fake internet money projects. Meanwhile, I'm riding Build-A-Bear to the moon.
In retrospect, it all looks so easy.
I know. Yeah, I know.
So the market cap roughly when the 900% run started is what, like 60 million ish.
Yeah.
Who's buying stocks that are 60? I won't buy stock. That's like it's tough to get a limit order in when the total company value is.
I mean, I'm sure they showed up to their mall, walked into the Build-A-Bear workshop, and was like, for the same price as a bear, I could just buy the company. Might as well. Might as well. Interesting. That's an interesting one.
Very interesting.
Now to get things really kicked off, we got some listener mail from John this week. Can we hit that jingle?
Go for it.
They fight and fight and fight and fight and fight. Fight, 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 fight. The Skippy and Doogles Show.
Thank you, John. I'm going to say thank you. The reason I'm saying thank you is because you are allowing me to talk my favorite topic. And this is what we mentioned just a short time ago. It may have been put into the executive order that we cannot discuss the underperformance of value investing, but we can discuss the underperformance of Cathie Wood, who, by the way, is not a value investor, just in case people were curious. Cathie Wood is the main portfolio guru of ARK. Cathie Wood became super famous after 150% return in the year 2020. Everybody was like, oh, genius, lady. I'm going to hop up.
Quick time out. And since that time, it's effectively been proven that she got 150% return by putting large amounts of money in small stocks and artificially driving up the prices.
Stop with your allegations. Stop with your allegations.
Go ahead.
All right, so here are a few things. We've touched on some of this in the show before, so if you've been a long-time listener, you've heard some of these stats, but it's still worth repeating because I just love every part of it. Okay, here we go. Reading from this piece, it's on thestreet.com about Cathie Wood. So her flagship fund, which is ARK with a double K, ARKK is the ticker, has returned 9% this year in January. 9%. You talk about cherry-picked, like someone be like, oh, what's the S&P up? I've been, 3 times the S&P return? Come on now. I've done it. What's your time period? What? What's your time period? What? No. Okay. 9% in January. But if you go back a little bit. 3-year, negative 3.5% annual return. 5-year, 3.7% annual return. This is when, if you look at the NASDAQ, in the article they compare it to NASDAQ because of what she chooses. NASDAQ has a 3-year annual return of almost 14%. And 5-year, 17%. And this is the creme de la creme that we touched on close to a year ago, I want to say, when the Morningstar was putting out the most shareholder destroying wealth funds.
Yep.
ARK came in at number 3, $7.1 billion of shareholder wealth destroyed between its launch in 2014 and 2023.
Well, and now they're branding that as the fact that their tax burden in future years is minimal, Doogles.
True.
If you lose $7 billion,
that's true.
That's true.
Yeah. Just so no one's confused, it is more valuable to not lose the principal capital than to have a tax write-off from your losses.
I just have to say this, just like for your small to medium-sized business, it's more valuable not to buy the $60,000 car at year end to save $7 on taxes.
Yes.
Like some people seem to think it makes sense. I mean, come on, people. Do not let taxes run your life.
But I can write it off. Why not lose on the stock? I can write it off. No, don't do it. Thank you, John. I appreciate it. It's been a hot minute since we've been able to talk about Cathie, and you bring me back to my happy place. So I just respect you.
But I mean, I didn't see that the formal body of the listener mail? Did it just say, I want Doogles to be able to rant about Cathie Wood? Is that what's going on here?
It said
Is there
the
a
people need
conspiracy on
this.
the pod?
The people need this. And here we go. We're giving the people what they want.
Speaking of people, I am ready to yell at an executive team of one of the largest corporations in the world. Are you ready for this, Douglas?
Ooh, which company?
Visa. Everyone
Okay.
loves Visa. I love your cards. I think they're great. I like your logo. I actually really like your company. And those who have listened to the pod for a hot minute will know that in late last year, like Q4 last year, I started looking at this and I was like, this is an amazing company. Basically it's fairly expensive, which I'll explain why here in a second. That it always scared me away. I started to build a small position, and I started to build a small position, gosh, around 20% ago. The stock is already up 20% in like 5 months. And this leads me to my point. The executive team is going to blow this for everyone. They need to start throwing money in a fireplace. Let me give you some numbers here, Doogles. What they reported in the past week or two is an operating margin of 66%, a profit margin of 55%, return on common equity of 111%, return on capital of 50%. These numbers are too good. You guys cannot do this. You are already being sued by the federal government for making too much money. I would personally like to build a big position in you. Literally, they cannot do this.
Visa is the only company where the investor relations person comes out and says, we have to delay our financial filing. They go, oh, what was there fraud? Was it like, what's going on? What do we? And they go, no. They're too good. Like our numbers are too good. If we put these numbers out, the SEC will take all of our money.
And let me just put that into context for you. Back in 2012, 2013, at one point they had a profit margin as low as 20%. Then they hovered in the mid 30s for a while. And now they're 50% plus. Like, guys, don't do that. And again, for those who don't know the background, like they are currently being sued by lots of government municipalities all over the world for some sort of monopolistic practice because they own so much of the payment network. But if your profit margins are this great, more eyeballs head your way. And people say, wait, why should we pay Visa and MasterCard 3% of basically every financial transaction that happens? We should build a network or expand a network like FedNow, which allows people to process payments in real time without fees. We should expand that so people can use it at consumer terminals. And then Visa doesn't have a business anymore. Literally, these results are too good. And I'm super fired up about it. Like, you can hire me. I can figure out a way to spend some more money. You have to spend some more money. You can't have profit margins at 55%.
You show me a company with 20% profit margins, I show you the next company I short. That is, I hear you. If you make that much money, everyone's coming for it.
Well, and
everybody's coming for it.
On top of that is they had no debt. They had no leverage pre-2015. They levered up to improve their financial metrics. Like, you guys didn't need to do that either. Like, come on now. Just literally learn how to lose some money. Not even lose some money. Get your profit margins down in the mid 30s. They could be on track to be the next $1 trillion company, dude. The way this continues, that is bad. Spin off a division, do something. You guys have to. This is too good.
You need to ruin this business.
Just like put it on sleep. Hit the snooze button for 5 years. Okay, come on now. All right, that's my rant. I'm done.
I appreciate it. I'm gonna reach into the fishbowl to talk about some life lessons. We've got this piece. This piece is called Life Lessons from the First Half Century of My Career. We got David A. Patterson up in here, and this is on acm.org, the Association for Computing Machinery People.org. There are two sets of lessons. There's one set of lessons that he calls people lessons, and there's one set of lessons that are career lessons. In total, there's 16. I want to talk about 3 of them. If there are any on here that you want to touch on, let's hit on that. I'm all for it. But there are 3 that I really want to highlight. Should I name them all, or should I just hit on the 3?
I thought this was a pretty good list. I'll name them real quick. So people focused, family first, choose happiness. It's the people, not the projects that you value in the long run. The cost of praise is small, value others. I like this one. Seek out honest feedback. It might be right. For better or worse, benchmarks shape the field. I learned that courage is not the absence of fear, but the triumph over it. Beware of those who are the smartest people in the room. So we'll just do people focus first. Anything stand out there for you?
Yeah, so the three I want to talk about are all from the people focus section. So yes,
Sure.
the first is seek out honest feedback. It might be right. I think in the context of people, as he puts it down, context of life, this is a good one. In the context of investing, we've discussed before how it's good to have a sounding board, someone that you can go into and be like, am I thinking about this in the way that I think I am? Can you see biases that I'm bringing into this that maybe I'm not able to see? Where are my blind spots, et cetera, et cetera. Being able to seek out or have access to that kind of feedback is so valuable because they are the animal spirits they talk about in the market where the market just starts going buck wild. That can happen within an individual too. You get all caught up in the psychology, the emotions, et cetera of it. And so it's good to be like, hold on, is this PE ratio of 954? Is that good or is that not good? Things like that. So it's healthy. And that's why I liked it. Again, he talks about it in the context of life. Because if you go out and you get honest feedback, one of the things he says is it's good to get the feedback in a more safe environment. He doesn't use that phrase exactly. What he's saying is if you get the feedback here, then when it comes down to when you're actually in the arena, like Chamath, when you're in that arena, then you don't have to learn your lesson that way. You can already get the feedback here. And I think that that's great, right? Before you start making leverage bets on your 940 PE stocks, get some feedback from somebody. Make sure you check yourself.
Small point there. Completely agree with everything you said. And the best feedback comes from a trusted friend, if that wasn't clear. Lately, there's been a couple times where I've asked chatbot powered by artificial intelligence for some thoughts, like that phrase, like, hey, I'm thinking about this. Am I thinking about this right? And it's so interesting how it's not the same. It's not nearly as good as a trusted friend, but sometimes it does help your brain navigate a situation like that. A use case I never really thought that would have value that I've seen a little value in.
Where I have seen on the chatbot, the AI front, it work specifically within ChatGPT. You can do this elsewhere, but within ChatGPT, I've created my own GPT that has frameworks, etc. that I like to use generally in life, but I'm not a machine. And so I can't just reference back to them, and see all the patterns, et cetera, automatically. And so with that GPT, it's easier for me to go there versus overall ChatGPT and just say, I'm thinking about this. Like, what do you think? And it'll use the frameworks, et cetera, plus everything that it has out in the world to then bring back a viewpoint that might relate to the way I want to be challenged.
Yep, completely.
All right, the next one. For better or worse, benchmarks shape the field.
I knew you were going to pick this one.
Oh, yeah, you did. Yeah, you did. I'm going to say two different things here. First is the way that he touches on benchmarks. And he says, if you choose good benchmarks, that can help to propel progress. If you choose bad benchmarks, that can hold you back. That simple lesson here, when he's saying shaping the field, means that the choice of benchmark can change your mindset and approach to something, change how you measure success, and therefore can change your ultimate progress in whatever your project and or your career. And he brings up an example of a case of saying, if you have a career ladder that is prescriptively like set out, if you check these boxes, you get a promotion, check these boxes, get a promotion. In that world, people will just check all the boxes and may not really push the company forward or even themselves forward in their learning. You're just playing to the test, so to speak. Whereas in another world, he mentions a different company. He says in this company, if it's really about making impact, create projects and fulfill those projects in a way that you're creating impact, and that's the mindset change, then you'll be growing more because you have to create value. So that's the example that he gives. I'll pause there. So that's the first tranche, and then you know where the second tranche is going to go. That's the first tranche. Any reaction to that one?
I mean, I have a personal story here where one of the companies I work with misread the benchmarks early on in their career. They read that they should their profit margin should be higher than is historically possible.
Mm.
And guess where they end up? At that higher benchmark. Sometimes there's anchoring that happens with the human brain here. So he says for better or worse, right? But sometimes it can be for much better if you push
Yeah.
the envelope a little bit. And just, I always think about profit margins, right? It's just what I do. But don't let your mindset be, oh, my horrible competitors that I talk trash about all day do X.
Yeah.
So that's where my goal should be. No. If you're better than them, you're better than them, and you should have better benchmarks than them.
And in that case, and that gets to my second point, there often the way that benchmark is determined or decided upon is what's the average of what's out there. You can take an average of a subset, average of entire field. But in this case, he doesn't say this directly, but I think one of the things he's inferring is that a benchmark is just where you set your target. And the way that you think about setting your target can shape what you do. So it's not the average of the world out there.
Yep.
And that's the point. I got right up here on my side. You can't see it, but I'll pull it down. I got this little sign that sits next to my desk that says, I'm not here to be average. I'm here to be awesome. Because if you choose the benchmark that is the average, you fit into the average. That's what you're saying. You're like, that's my goal, is to be average. And it's kind of like, I think it was Brian Chesky that says this a lot. I don't know if he came up with it, but he says this a lot. Says if you shoot for the stars, you hit the moon. He talks about that with regard to Airbnb. If you shoot for average, your best case is probably being a little above average. And who wants that?
Yep.
So I do agree with the point. It shapes the field. It's very important how you think about and choose your benchmarks and or targets.
I'm dying to hear your third quote here.
Beware of those who believe. Important word here. Beware of those who believe they are the smartest person in the room.
Go ahead.
Why?
Talk on that.
Okay, I will. Having a mindset of curiosity and learning is so important to growth, both as an individual, but also for a group. If everyone's pushing to say, I'm going to start with a little bit of humility and come in here and say, what do I learn? I have some faith in what I know, but what can I learn? If you have the person that's the smartest person in the room or believe they're the smartest person in the room, they're probably going to come in with aggressive opinions, aggressive tendencies. They can often, don't have to, but can often block out additional learning. So growth is a lot harder because they know the answer. If you come into a situation knowing the answer, progress is impeded.
Mm-hmm.
In the investing context, to bring this one, in the investing context is when hypothetically, someone comes in and it's like, I've done this research on all the most emerging technologies. And my research shows that Bitcoin's going to go up by 1,000%. My research shows that genomics is going to do X, Y, Z. And so therefore, bet on me, get your negative 3% returns. Like that kind of I'm the smartest person in the room mentality. I don't even know. I'm talking about Cathie Wood, by the way, y'all. I don't even know if Cathie Wood believes that she's the smartest person in the room, but she acts like she believes it, regardless of whether or not she does. And when anyone, Cathie or otherwise, when someone comes in with that level of fervor, I think your little ears should perk up and you should fact check.
Yes. All right. I said I was going to read all the career focused. I'm actually not, but I want to hit on 3 there. Okay.
All right.
First, most of us spend too much time on what is urgent and not enough time on what is important.
Yes. Preach.
I mean, basically go for a walk. Like this is, yeah. If you're sitting there feeling overwhelmed, first of all, write a list. Second of all, go for a walk. You're going to figure out that a lot of the urgent stuff is just not that important.
That's right.
And I used to say in my corporate career, I don't know if you feel this way, but I used to say there were like, 5 to 10 meetings in the year, usually meetings, sometimes other things that really made the whole year. And the rest of the stuff you did, sure, you should be competent and kind and responsive and everything else. But like you nail the right important events, you're in good shape.
I completely agree. I think it's true with number of priorities. Only 3 things. I'm making up the number 3, but small number of things matter. I think that's completely true. I do like this one a lot. And it is so easy for people. I see it all the time to be like, oh, well, the deadline for this is 2 p.m. So can everyone spend all their time working on this instead of saying, is this even important for us to do? There's a book out there. It's called 10X is Easier Than 2X, which I think you have on your shelf. Yeah. We've discussed it here before on the pod. And as far as it relates to this concept, The idea is that if you can figure out what the most important things for you to do are and then carve out all the rest of the stuff, it's quote unquote easier to get that 10x return on whatever you're doing. I don't mean return on investment, but like return on whatever it is that you're doing, 10x impact. Whereas the 2x often comes from doing more smaller value items, but they feel like what you should be working on instead of
Mhm.
slicing it off. They talk a lot in the book about your customer base and saying that people get so afraid of losing customers that they oftentimes won't say, who are the customers that we should have? What are the customers that fit where we're trying to go in the future as a company? Where are the customers that have the strongest product market fit, therefore our highest value customers? And the rest, they can go. Like, let them
Yep.
go.
I mean, I say this all the time that if you're not firing customers, your profitability is not nearly where it should be. You're below those benchmarks
There,
because the most profitable companies are the ones that actually sell to their most profitable client,
there it is.
not
There it
anyone
is.
that knocks on their door.
Yep. All right, what's the next one?
We don't need to talk about this one, but number 10 is nothing great in the world has ever been accomplished without passion. This is pretty straightforward. If you like doing what you're doing, then you spend every waking moment thinking about it and you make a better product. Just don't swim upstream on this one.
There you go. And passion doesn't mean just simply a lot of energy.
No.
Because I think that gets confused sometimes. Like I show up and I'm showing up like Tommy Boy when he's swinging his arms back and forth in the van down by the river, right? That's like a lot of energy. But passion is different. Like an inner drive to get the thing done.
All right, last one for me. There are no losers on a winning team and no winners on a losing team.
I get this one in concept, but I've been on some winning teams that have some losers.
I like that you called that out. For me, this doesn't mean you don't have slackers on a winning team. Put it that way. But it means if you create a winning culture, it's so much easier for everyone to row in the same direction, build that inner passion. The environment is so much better on a winning team.
I'm not going to call anybody out specifically here, but if you look at I believe it was the late 90s, 76 was the Allen Iverson on it that went
Yeah.
to the finals. There was one winner on that team.
Oh, come on now. No. Aaron McKee? Come on.
I said I wasn't going to name names.
I like that team. Um, for those who didn't watch, our favorite AI, which is not artificial intelligence at all, it's Allen Iverson, in college and in the pros. Basketball is a game with 5 teammates, and both of those teams at times would say, "Hey, you other 4 teammates, go stand in the corner and then let Allen Iverson beat the person who's guarding him, and then often beat the other 4 people trying to guard him and score." So, to your point,
Pretty good strategy.
that team didn't win though, Douglas. They made it to the finals. They did not win.
They
I don't
won
know
a
that it fits
lot.
this-
They won a lot to get there. So in the end, maybe not so much, but
Oh my goodness. Any other quotes stand out?
no.
This was surprisingly good. I don't know David, but I liked it.
Yeah.
Pretty well put together.
No more for me. What's next in the fishbowl?
I have a question.
I have an answer.
What if among Buffett's incredible traits, what if he's a top tier predictor of market crashes? I've never looked at a chart like this before. In the past, I've usually looked at Buffett's total cash holdings, not cash holdings as a percentage of his total asset. So this chart is making the rounds. It will be on the Substack on Monday. Basically, there was a big spike in cash holdings from about 2% of his portfolio to almost 12% of his portfolio in late 1998. He was a little early on the 2001 crash. Then there was a big spike around 2005, again probably 12 months early on the 2006 2007 nonsense. A decent spike around 2020, right before the 2021 crash. And we all know that there's a huge spike going on now. Cash and equivalents are almost 30% of his portfolio currently. Again, is he 18 months early? Probably. But what do you think of this chart?
I think it's fascinating for a couple different purposes. One is, as you brought up a bunch, the contradictory nature of investing, especially when it comes to investing advice. One of the things that Buffett, I've heard him say a good amount, is regard to not timing the market.
Oh, but all of his advice is for everyone but him. I
No,
mean,
no, exactly. That's what I mean.
that's
That's the
contradictory as well,
yeah,
but yes.
yeah. That's the point. But here, even the second thing I'll say is it could be. I don't even know if it is timing the market, if it's looking at the fact that he looks at what's happening in the market and goes, "What would I buy today?" And the
It's the same
smaller that
thing. I know what you're saying, but it's the same thing.
not
That's
exact.
what I
No,
do. I go,
it's
there's no
different.
deals out there. So then I end up holding more cash. But like,
It's different than saying the market's about to crash, so let me sell all my stocks. That's different. They are highly correlative. But
yeah,
if he's just saying, if there's nothing to buy, I'm not deploying. And if I
yeah.
look at what I'm currently holding and it's not something I would buy today, then I sell or some version. I mean, it's much more complicated than that, I'm sure. But something along those lines, it just so happens that his cash reserves end up being high when there's nothing to buy.
Mm-hmm.
You ask why? I say try, my guy.
So, but the last three major, the 2020 peak in cash holdings is a gradual trend. It's not like there's a clear action there. The last three huge spikes on this graph where he made some big sales and decided to hold cash are 98, 2005, and 2024.
And now,
Yeah.
yeah. And it's huge. The run up over the last couple of years is massive. Massive. What are the percentages here?
Most of his peaks are between 10 and 30% of his total assets in cash.
But over the last couple of years, it went, what was the trough?
Oh yeah.
And where's it
So
now?
he at his low in basically early 2022 was 10% of his position in cash, and now he's going on 27% of his position in cash. Goes straight up, man.
Yeah. It's like the almost the exact mirror image of what's happened with like the Nasdaq. The higher the Nasdaq goes, the more cash
That's all he's
he
doing
ends up
pretty
having.
much behind the
Yeah.
scenes. He's just like, oh, NASDAQ was up. I need more cash.
hmm There it is.
I think it's good. I mean, I also think this is really hard. And if his predictive power holds true, he's probably 18 months early. That's just how it works. And it takes time for other people. He's a very cautious soul by nature. So of course he's going to be early. But I think there's something to this. I've certainly looked at 1,000 other charts of people claiming they can predict the markets, and it's never been right. And I've certainly seen the YouTubes of everyone saying there's a crash here, there's a crash there, and they bat 10% on that. This chart is super fascinating to me.
Speaking of, there's something that you just said that caught my ear here. So I think Warren Buffett back 30 something years ago, 35 years ago, he called his boy. Ring, 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 ring. Yo, what's up? This is Tretch. Hey, Tretch, it's Warren. I want to start this group called Cautious by Nature. New phone, who this? Anyway, it's a little naughty by nature joke. Here's something you reminded me of. And for reals, though, it's related. It's not exactly the same thing. It's related. But I want to have the type of conversation that we normally have in one of our premium episodes, but we'll bring it to the masses right now. That's okay. Talk about a specific stock, Twilio. Will you go on this little adventure with me?
Yeah, do I need to pull up some financials here?
You should. I think it would be good. I think it'd be good. So I'll give the context while you're pulling that up. For longtime listeners, you've heard Twilio being brought up at a high level, at least here on the pod. For premium subscribers, if you've been premium for a few years, you probably heard more intricacies about my personal Twilio decision to purchase. I bought Twilio maybe about 3 years ago, 2.5, 3 years ago, something like that, in a few different tranches. The current Twilio tranche that I have is I got in at around $45 a share. And you may recall that there came a point when I first got into Twilio, I called it a quote unquote forever stock.
Yeah, that
which
was
isn't
dumb.
But the purpose behind that was really believe in the industry that Twilio's in. I went communications as a service it's needed. They have very little in the global, at least when I was looking at this, very little internationally gone on. There's a lot of international stuff they could do. They still have a lot of growth in the US. Then 2022, growth completely stalled. And I was waiting for this because I love Twilio, but I wasn't in Twilio yet. Twilio was up like $400 a share. And I said, once this stock hits like 80, I'm going to start getting interested.
Yeah.
2022 happens. Twilio starts to crash. I started getting in the 70s and then continued buying all the way. Twilio went down to like 40. So as I mentioned, the current tranche I have, the average price is about $45 a share. My belief in that growth story subsided. I was like, ooh, actually, I don't know if they can execute on what I thought they could execute on. But when it was in like the 40s, the reason I threw in because I went, but it's super cheap. It's still like a really from a growth stock perspective, not a deep value perspective. I was like, it's super
Yeah.
cheap. I
Yep.
do believe in their profitability story that they were telling. And if that happens, great. Okay. So that's context. Anything else you want to know context wise?
No, I mean, you're talking about 5-year growth rates of 34%. Now it's cooled recently, but
Yep.
something going to the moon with limited debt, with looks like lots of cash on hand, that's actually profitable. I mean, a lot of these companies that are growing at rates like that are losing money hand over fist. And
And they
that's the
were.
trade-off there.
And they were
True,
a few
true.
years ago. Yep. But now they're not. So now the conundrum, what I want to talk to you about is this. So we've discussed Brazil a little bit here. I have holdings in 2 Brazilian stocks, StoneCo and XP Inc., both in financial services in Brazil. And generally speaking, I feel bullish, time horizon TBD, but I feel bullish on Brazil as an organization. As a country. I feel like Brazil has just gotten hit right, left hook, jab, jab, knee to the stomach, gotten hit pretty hard. And I feel pretty bullish about Brazil overall. So as I'm thinking about Brazil, I'm also looking at Twilio, which is no longer now Twilio. For those that don't feel like pulling it up, Twilio's now at about $145 a share. And it's no longer at that place. It could still have a lot of room to run, potentially. But it's no longer at the place, which is why I continued to hold then, because I stopped believing in their execution of the growth story. I was holding because I believe what could happen if they went profitable and thought it was super cheap. It's not super
so
cheap
your
anymore.
hypothesis was right.
And it's not super cheap anymore. I'm not saying it's wildly expensive at the moment, but it's at that point where it's not super cheap. And I have the Brazilian alternative, which is my next thing I'm thinking about that's in my head. And I just want to talk that through with you. I want you to guide me, as we were just discussing before, honest feedback. I want you to guide me on my thought processes with this one.
All right. Well, you've come to the right place, Douglas. Let me tell you. The stock chart over the last year is absolutely bonkers. I'm going to start with a personal story that you know which side I'm going to advise.
Double
I mean,
down with leverage. Double down with leverage.
I'm going to tell you to sell this thing, but we were exchanging texts this week. We both bought Meta in the 90s.
Not the
We both
1990s. $90 a share.
No. Yeah. In what? 2000, was it
I think it's 22.
2002? Yeah.
Or was it
2022.
22?
Yeah.
Yes, I think.
Yeah. Right. Meta crossed 700 this week. We both had fair values, if I remember right, around 350 at the time.
And that's when I got out.
Yep. I sold a bunch and then I sold a bunch more, but I was just feeling a high. I wanted to see how far the thing could go. So Meta's one that already did this stock chart, right? That already went up like 3x and then it doubled again.
Yep.
That's hilarious. Could Twilio potentially do that? Sure. But man, the price movement just in the past month alone from like 115 to almost 150 is that when true profitability was reported? What happened in January that went crazy?
Cash flow. It was both so their non-GAAP profitability happened last year.
Okay.
They're announcing earnings sometime in the next week or two, but they had an investor day. And at their investor day, they came out and said, we now see GAAP profitability on the horizon. And whereas over the past 3 years, we've generated cumulatively something like $600 million in free cash flow, over the next 3 years, we see ourselves generating $3 billion in free cash flow. That is the top line of what they came out with.
See, now I'm actually on the fence just because you know how much fun it is to hold something that goes up like a 10 bagger plus.
Yes.
I mean, you know how much fun that is?
Yes, I do. Yes, I do.
Your old mindset of this is a forever stock. Here's the deal. If we want this stock to get to 450, just so you get your 10x.
Yep.
That's a long and torturous road with lots of volatility and turbulence. So can you truly put this in an account where like you never look at it? Because that's the only way this
that's the only way.
fun.
That's the only way.
Brazilian stocks are beat down so much. I mean, we got to talk about that a little bit. That the long and tortuous road will still be volatile, but it won't be as long, and the returns could easily be just as good.
And that's where if you take taxes, because taxes have to come into consideration here. But if you take taxes out of it, like if you take the transaction costs out of this, if I'm saying this doesn't get to 450, because 450 is like 3x where it is right now. But if we just say doubling, like if you have another
Sure.
double from where it is
Yeah.
today, in that case, if I just take like for like, my bet would be on Brazil doubling versus
Oh,
Twilio doubling.
yeah, probabilistic outcomes. Brazil
Yeah.
doubling before Twilio doubling. I'd completely agree with you because make no bones about it, this stock is expensive currently.
Okay. I already said I don't think it's not expensive. The PE, it has a high PE, but that's because it's still just getting into profitability.
I mean, price to cash flow is 30. It's only growing at 6% a year. Like,
It's not cheap.
okay, fine. I
But a
mean,
price to
fine.
sales of like 5-ish is not an expensive growth stock.
Uh, okay. So then where this probably breaks down is the most sophisticated. I mean, I don't know if you can do this math. It's gonna be challenging for you, but
Okay, I'll focus.
I think we could just go halvesies on this. You could sell half, make a really nice return. Your remaining Twilio holding would be a risk-free investment, even more so because you've already made your funds. Put that into Brazil, hold both, ride them on out.
If I zoom out a little bit from what you're saying, because I like this broader philosophy, is put my sense of the probabilities out there and
Sure.
adjust the portfolio according to the probabilities, which is the
Yeah, I
simplest way to
mean,
do it.
if
The
you're
simplest.
like, again, if we talk about that doubling thing and you have twice as much confidence that Brazil doubles before Twilio or something, it could be 33 ish, 66 ish percent. There could be a
Yeah,
lot
yeah,
of
yeah,
things.
yeah, yeah.
Yeah, but you know what I would do. I would have sold Twilio long ago. I would have sold Twilio at 115. I love that you held it and watched it flip profitable. But also that hunch, that passion you had for this to be a forever holding, I think tells you something.
It's a question of execution. These are the places, like this is the kind of spot for me where when you have I'll call it the quote unquote big time professional investors that get to know management, that's where to me that kind of thing starts to, for personally, that's where that kind of thing starts to become a bit, I'm not going to say it's easy, but a bit easier for me because the question is really execution. I still believe from an industry, if you look at communications as a service, from an industry perspective, to be the infrastructure for the way that communication happens, massive and only growing with AI. So it's execution. What's the company that can capture that? Which at the time I believe was Twilio. The way it was being run, at least from outside in, I was like, they've changed CEOs.
Mm-hmm.
I don't know the company inside, and it's a bet on execution.
You could like that's all attainable though. Um, you just I don't think you want to. You have the ability to spend the time
No, yes, no.
getting
It's
to
not
that
my fault.
Twilio's
It's not my
management team.
job.
It does you don't yeah. So don't let that be a hindrance. Now let's talk Brazil because sure Brazil is dirt cheap, but man, there's so many complexities there. I hold like the Brazilian stock market because I want that diversification. So one, you're talking about two companies rather than the entire stock
No,
market.
no, 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 no. I was talking about when I said Brazil, I was talking about Brazil. I already own two companies.
Oh,
So
you would go in
my
with
shift would
okay.
be for Brazil as a whole, as a country. Trump gonna buy Greenland. Dougall's gonna buy Brazil.
This won't come as a surprise to you. I've done this a bunch. Buy the cheapest stock market in the world, et cetera, et cetera. I think Brazil's top five at the moment. I don't think it's actually officially the cheapest. And I feel like a broken record. You know this, but right, your currency risk. There's all sorts of, is the government going to get overthrown? Who knows? So
I know, but you're gonna call. You're right. There's certainly risks. So I'm not about to debunk that, and you're gonna call hogwash on what I'm about to say. But
okay.
in agreement with things you're saying. So let me take the government overthrow out of there. Let's just take that
Yeah,
off the
sure,
table
sure.
because whatever. Currency risk. The currency's already been hammered. Doesn't mean it doesn't go down further. However, when I look at the policies that we're talking about right now in the US, it's hard for me to imagine that the US dollar is going to continue its valuation rise. Like
Did
nearly
I
all the
just chuckle?
policies.
Did I?
Yeah, yeah, you did. Nearly all the policies we're talking about are if your goal was to devalue our currency, you would do the policies that we're currently
That
talking
might
about.
be the goal, to be honest.
Yeah. So
Uh,
if that's the case, then I think about the valuation from a currency perspective, and that feels like the wind would be at the back.
yeah, but you could argue that with a bunch of countries that are in Brazil as well.
You can, but where Brazil is from its companies and where
Mhm.
the currency's already been hit. So it's the quality of the organizations plus currency hit. I personally would take some of that risk off the table. It's definitely a risk. It's not the risk doesn't go to zero,
Yeah,
but I would take some of that risk off the table with currencies.
sure. I mean, I already own, I'm just making sure I say the right ticker, EWZ paying 7% dividend.
Yeah, I
I
know you
mean,
do.
come
I'm
on now.
I'm going I'm going FLBR if I do it.
Let's just look at that. Look at that spread. Anyway, see what I was doing there is just being a really good friend, and you didn't even know it. I wanted to hear the passion in your voice as it comes to Brazil. Now, listen, Stanley Drunken Miller. All right, I don't do macro investing, and I can't handle all the currency risk and everything else you're talking about. But you sound pretty bullish. You sound pretty convinced and
And
convicted.
and to go to your two company thing, when I was looking at Stone and because my initial reaction was Stone and XP Inc., which I already own, I was like, throw more in. When I
Yeah.
look at their fundamentals, I'm like, throw more into them. And then I thought about some of the risks that you're naming. And I was like, and I'm doing that in a country I don't really know that well. Two individual stocks in a country like that. And they represent enough of my non-model portfolio that it's like material
Yeah.
where they are. So it's not like I'm not betting on those. I already have the bets there, but I still believe in Brazil as a whole still looks pretty like nice and glory.
Guys,
So,
tune in next week. We'll do the show from Brazil. We'll do a little research down there. I've always wanted to go to Rio,
oh,
so I mean, yeah, yes, no.
that's right.
Actually,
And
next week you're busy, but maybe a week or two
and I told you
after.
that Women's World Cup in a couple years, I'm buying all my currency now. Just gonna put it in the basement.
If this is not clear, if you're a new listener to the show, he's joking, and we
Yeah.
don't advise
Yes.
FX trading on the show, or really macro investing in most cases.
Mm.
A good conversation. So, what are you gonna do? You still thinking about it?
Yeah, I'm gonna spend part of this weekend looking just to retrain my head on some of the fundamentals, qualitative and quantitative, of like where Twilio is, reset my belief right now and where that is, look at Brazil again, and I'll probably make the decision before Monday.
Okay. If you run into the visa management team, maybe you could tell them to throw some money down at Brazil, somehow make their profitability look horrible for a couple of years. Could we do that? Could they buy Stone Company
What you
already?
do is you just put a tariff on Visa.
I'm gonna lose it over. Yeah. That Douglas, that's a joke. That's what's going to happen. If
Yeah.
enough Congress people see that are 55% profit margins, which is basically all free cash flow, there will be a tariff on Visa that will either break them up or cause them to be a lot less
Yep.
profitable.
Like if the government just took straight up 25% of their profit and just said that's just a law now, they would turn into a great company. Like that is how much money
True.
they make.
And they'd be around for longer too.
Yeah.
Because all right. Well, so now we're all over the place, guys. We are on YouTube, like we mentioned. Please support the show there. We're at skippydoogles.com. We take listener mail, skippydoogles@gmail.com. We do premium subscriptions to support the show, skippydoogles.supercast.com. Gosh, did I miss anything, Doogles?
No, ubiquitous.
We appreciate you hanging out with us. And we'll see you from Brazil in the near future.
Bye bye.